The stock market can feel like a roller coaster, exciting for some, nerve-wracking for others. This fear often leads to avoidance, but today we're diving into the solutions we can take. I'm Mike Loader. Investment Insights starts now. Welcome back to Investment Insights, presented by the team at The Investor's Way, where each episode we put the power in your hands to master your money. It's good to have Andrew Woodward joining me in the studio. Now, this year has been full of market swings. I can barely keep up. What's driving everything that's going on?
There's three main factors that I want to talk about. The order in which they are impacting the markets, I'll leave up to the viewers to choose which one is the most appropriate. The first one, obviously, is when it comes to the stock market, the only time we tend to hear about it in the media is when it's falling.
Yeah.
And there is obviously an appetite for fear when it comes to consuming media. And so if we can talk, or if media can talk about these massive swings or massive falls, it's going to get news, it's going to get attention, and everyone panics. And panic leads to more selling, which leads to the more fear, which leads to more selling, and so on. So it becomes a self-fulfilling prophecy to an extent. So that's number one. Then we've got the big one, which is the trade war. And emanating out of the US, tariffs being applied to everybody. And one thing that financial markets like is certainty, and one thing they don't like is uncertainty. So with these trade wars, tariffs, all that type of stuff, they're on one day, they're off the next day, they're double the next week. It's created an enormous amount of uncertainty.
Yeah. And
global markets are global. They're intertwined. Trying to separate out of a global market is not going to help any country. And so that uncertainty leads to the potential for profits to be less than what they were. And therefore the markets are fearful of less profits. Profits obviously is what drive the share prices higher. And so all of that leads to another reason for the markets falling. And then there's the third one, which if you were I guess a traditionalist like I am, this is the one that I actually think has a lot more to do with it than anything else. The last 2 years in the US, you've seen greater than 20% gains in their stock market. It's very unusual that you get two in a row. It's almost non-existent that you would get a third year of 20% growth. So we're actually just seeing a bit of a pullback from all-time highs. Happens all the time. A little bit more aggressive at the moment because there's a reason. Like markets can use other reasons to do certain things and disguise what's going on. But ultimately, we're not going to see the massive growth we've seen over the last 2 years this year, no matter what happens. Yeah. Now that's not to say we won't go and hit all-time highs again, but we're not going to see another year of 20% growth this year.
They talk about boom and gloom, right? These are waves and ebbs and flows that we always go through.
Yeah, and the market pullback has been a bit more rapid because of that uncertainty. But in reality, it was always going to happen at some point this year. Yeah. And it's just been a little bit more rapid, and it creates that fear and panic. Everyone jumps on board, and before you know it, there's people running everywhere.
Let's touch on that a little bit more. How does that impact investors? All of this swinging around back and forth, we obviously see the numbers, the big red arrows and whatnot, but let's dive into it a bit closer. How does it actually impact investors? Yeah,
look, it emanates or presents itself in the fact that people hate seeing their money erode.
Yes.
So they're quite happy over the last 2 years seeing the market rise, and they're sitting on some nice profits hopefully, and so that's all nice and feels good. And then you wake up and you start to see some red numbers on your screen, and people don't like it. And so that leads to this fear that, well, I'm losing today, what if it keeps going and going and going and going, and I end up all my profits disappear. And I often remind people, particularly clients, about COVID.
Yes.
When COVID struck, the market dropped very, very rapidly, and if you'd have listened to any financial news at that time, it was almost like the stock markets were going to cease to exist.
Correct.
And yet we are dramatically higher than where we were just 5 years ago, 5 years saying that. But 5 years ago, massive drop, and then the markets have returned. So the problem is that fear leads to emotional decision making, and making decisions that don't actually support your long-term goals when it comes to the stock market.
Absolutely, things like FOMO and mass selling and quickly and reaction rather than response, I suppose would be the way to say it. But what are the best ways to overcome that fear, that anxiety, do you think? What advice would you sort of provide?
Well, for viewers listening, one of the pieces is something I said to you before we went on air, and that is stop looking at your portfolio every 5 minutes. Because looking and seeing the market jumping around in these volatile times is going to, again...
Tension.
It builds the tension, it builds the fear, it builds the emotion of loss, and nobody likes making mistakes, and if they feel they've invested in something and now it's a mistake, they're going to make some emotional decisions. So the first one is don't look at it on a daily basis or even on a 5-minute basis. So remember that you invested for the long term.
Correct.
And if you look at the stock market over the long term, it always has periods of time where it's having corrections or crashes, whichever terminology you want to use, whichever emotive button you want to push.
Doom and gloom and doom.
The markets will always have these retreats, but they have never failed to achieve a new all-time high.
True.
So they are always effectively in an uptrend. Now that's not entirely true. They do have downtrends, but over the longer term period, if you look at the stock markets, they're rising. So you invested for the long term, keep your decisions long term, think long term, and ride out this period, and actually look at this period as opportunity. And Warren Buffett has this magnificent quote about be fearful when everyone else is being greedy, so maybe the last 2 years, but be greedy when everyone else is being fearful.
So now's the time to buy.
So now is the time certainly to be looking to buy it. It doesn't necessarily mean you buy, as soon as you've heard this conversation. It's about looking at what's going on, and if the market has settled down, then you're getting a massive discount. You're buying at a discount. It's Boxing Day sales come early in the stock market because, like I said before, the market has never failed to go back and achieve an all-time high. So if you're in it for the long term, the markets have been down about 10%. You're basically getting a 10% discount in the stock market.
You only have to look at the Google listings for these things and go 5-year, 10-year, and you start to see that rise go and your anxiety eases up. But what are some of the hidden pitfalls that you wanted to highlight of long-term investing? Is there anything in mind that people need to be aware of?
So look, long-term thinking obviously is the goal. So when we're talking about pitfalls of long-term, of the long-term strategy, there's not a lot of them. But I wanted to just highlight that in order to have that long-term mentality and be confident that it's the right way to go, is you've got to understand when the stocks that you've bought are no longer achieving what you bought them for in the first place. So you've got to have an exit strategy because nobody can predict the markets and no one can predict individual stocks. And so you might have done all the right things. You've got a basis for your decision making, you based it on good data, the company was doing really well, but life happens, the world changes, and that company is no longer doing what we wanted it to do. So you've got to have a basis for exiting that stock and putting it into something else, or another stock that is now going to do what you want it to do. So the trap of long-term thinking that I wanted to highlight is don't be completely blind to the fact that sometimes is a good time to get out of a particular stock and move it into something else and allow that money to have that exponential growth rather than sit in something that you may have fallen in love with because it was doing really well for a long period of time. And we laugh, but people fall in love with their stocks. They become their babies. So if it's done its job, but now it's going nowhere, or it's starting to erode your profits, have a strategy or a decision-making model that enables you to say, this is the time I need to move out of this one and move into something else.
Try and find an elegant dismount if you can.
It.
But where can viewers learn more about your investment approach? You and the team at Investors Way are obviously keeping a close eye on these things. You're helping a lot of people out there. What would you say?
Well, we've based our stock investing criteria or selection process on Warren Buffett. It's no secret I'm a fan.
Himself.
I'm a fanboy. And he has been very good over the years at sharing how he assesses what's a good stock and why it's a good stock. And so we've used and developed that information to come up with 7 criteria that helps us use data, not somebody else's opinion, data to say these are stocks that are performing, have performed, have longevity, have the size and value to be around for the long term. So they're not about finding the next Facebook before Facebook's around. It's about waiting for it to prove it's going to be around for the long term. And this is a trap a lot of people have fallen into with things like lithium. You know,
right.
Lots of people going to invest in lithium because it's going to be the next big thing. But unfortunately, we're going through that consolidation phase where not all of those stocks are going to be around. They're going to get consumed or disappear. And so we wait until all of that's happened. We let the company prove they're going to continue to produce profits and cash flow that builds the stock price over the long term. And so if people are interested in those criteria, then they just can go to the website and get in touch with us, and we can talk about how we can give you access to those criteria. But ultimately, it comes back to those criteria are a decision-making model that enables us to make repeatable decisions. So we're not relying on
sugar hits.
We're not relying on a mate at a barbecue who might say, I've heard about this next great tip, or overheard a conversation on the commute to work where someone's talking about something and you go, oh, that sounds great, I'll go and invest in that, with no basis for that decision. Or listening to some of those supposed experts on various channels who are giving their views on what to do with stocks.
Here are 5 things you need to know right now, and if you don't invest, you're in trouble.
Well, even worse, it's like, buy this stock today, it's the right price, and then suddenly it's falling. Like there's a guy in the US who has created people who basically buy stocks against what he says because he's wrong more than he's right.
He's playing the game.
Yeah, so we want to have a criteria that enables people to make repeatable decisions. Now, they're not always going to be right.
No. But you can't predict.
But if you've got a criteria you're following, you're moving the odds in your favour of being more successful than not, and you're not basing anything on emotion or other people's opinions. It's some solid, Warren Buffett-backed criteria that enables you to make repeatable, proven decisions.
Responsible decisions as well, I'd add to that. But Andrew, thank you so much for joining me on the program today.
Excellent. Thanks for being here.
And a quick reminder that the following program is for informative purposes only. Always do your own research before making any major financial decisions. To learn more about how you could master your money beyond our discussion today, visit theinvestorsway.com.au. Thanks for your time.
You're watching Ticker. We'll have more in just a few minutes.